Hey folks, welcome into the show. I'm your host, Lou Caputo. Today we've got a very interesting program for you. Let me ask you a question. How's your financial well-being? How's your personal well-being? Do you think that those two things collide sometimes? Could you use a little help in that arena? Well, we've got a guest today who I think is going to be able to help all of you out there. This gentleman has a bachelor's degree in finance. He's got an MBA. He's an adjunct professor, and he wrote the book, literally, called The Financial Pocketknife. Let's meet him right now, Jim Stoddard. Hey, Jim.
Great, Lou.
How are you?
How are you? Great to see you.
Great to see you.
Thank you for having me today.
Thank you for coming. So, I've been reading the book, and this is a very interesting piece that you've got here. What made you go down this road? What made you write this book?
So, Lou, I appreciate the introduction, by the way.
Sure.
I've been in the financial business for almost 26 years now.
Right.
I've been in all facets of it, insurance, investments, you name it, I've been there.
Mm-hmm.
I came across this product, and it really is the best product that I've ever seen to help families build a strong financial foundation.
Right.
And what's interesting is I have a colleague, and he's the advisor to billionaires and the rich and famous. You would know a lot of the names of the clients that he works
really?
with.
Okay.
And his motto is, I make rich people richer.
Mm-hmm.
And what is amazing is that this product is readily available, yet nobody knows about it. No one at all. As a matter of fact, I
Right.
speak with professionals all the time, with CPAs and attorneys, and they're not familiar with this. So the purpose of the book was really to help educate people on what this product is,
Right.
what it's about, how it can benefit them, and really to help everyday people more than the affluent, because the affluent already know about it.
That's true. Right, and they have plenty of people advising them, and
That's right.
I think that's a wonderful thing. And I kept coming across things in the book that I'd never heard of before, but they just seem to make so much sense. For instance, you mentioned dream killers in the book.
right, yeah.
What is that?
So dream killers are all the things that keep us, they're financial and just regular life issues that
Right.
keep us from achieving our dreams. Now, when we're kids, we all have these grandiose dreams.
Right,
and,
sure.
And they're all unique to us. They're specific to us. But as we get older, we get beat up.
Yeah.
And those are called the dream killers. And I've identified 19 of those
Right.
that we have outlined in the book. And depending on how you manage those 19 dream killers throughout your life is really going to determine on how successful you are, how great you feel about things, and just the quality of your life overall.
Well, I found it really interesting how many of the dream killers had nothing to do with finance at all.
That's right.
You know, and yet, and we were talking about this before the show a little bit, how finance affected all of those things, even though each one wasn't specifically financially based.
Exactly. So really, as a financial advisor, and
Yeah.
I train on this all the time, other financial advisors, our job is really to help people have a better quality of life and have their families have a better quality of life. And
Right.
so that's just not financial issues. Those are all the things that affect us. And really, when you look at financial things, a lot of the reason why people aren't successful in that area is because they may have other non-financially related things going on. So part of these 19 dream killers are, in fact, things that have nothing to do, or you wouldn't think they'd have anything to do with finance itself.
And yet they do. That's
Yes,
that's
absolutely.
amazing. In reading the book, I kept coming across terms I'd never heard before, and one of them, I got to read this here, indexed universal life.
That's right.
It sounds really confusing and, quite frankly, a little boring. What? Tell
Yeah,
me about this.
absolutely, it does sound boring.
Yeah.
And unfortunately, insurance companies traditionally don't do a very good job of naming these products, and for whatever reason, we come up with these crazy names. So
Right.
if you break that name down, though, then it becomes much easier to understand. So whenever you hear the term index, that typically means that somebody has some type of investment or savings account
Right.
that is related to the market or linked to the stock market in some term. The word universal just means that there's lots of flexibility. All right, so replace that term universal with flexibility. And there's flexibility in benefits,
Right.
how you collect benefits, the types of benefits, how you invest in the policy, how you get money out of the policy. And then life, of course, is the number one reason why you would have this product, is to protect your family in case you died prematurely. However, you could substitute life with a lot of other things that life insurance does. So it could be inflation protection. It could be stock market loss protection. It could be critical care protection, chronic care protection. It could be creditor protection, probate. There's all these different things that it actually does. And so when you think of it in those terms, then the name becomes much simpler. I
Right.
believe.
So, I mean,
Yeah.
all the things you just mentioned never would have occurred to me. I mean,
Never
and
would
that's,
have, yep.
and I guess that's why I need to get the book.
That's right.
That's
Absolutely.
why people need to get the book.
Exactly.
And speaking of, so the name Financial Pocketknife, where did that come from? What is the Financial Pocketknife?
And so, as you just said, it sounds very confusing,
Yeah.
this whole product, and it is very confusing. So, as an educator, one of the things I want to do is make it as simple as possible and use metaphors. So, if you think about a regular pocket knife, we have one here,
Yep.
right? This is all kinds of, or has all kinds of different
impressive.
tools that are, yeah, this is a great one, isn't
Yeah.
it? Yeah. So we have all kinds of tools in here
Yes.
that help us with individual things. And what we do is we put this into one tool and it becomes a super tool. And so the metaphor for this financially is the idea that Index Universal Life Insurance has all of these tools that help us with financial things.
Right.
Not just life insurance, but help us with different parts of our financial world. And we put them into one financial super tool. And so
Right.
it's just a real easy way to relate to people exactly what it is and what it does.
It's funny though, because when I hear the term life insurance, my brain just starts to wander. It starts to go somewhere else.
Yeah, it does,
And,
yeah.
and how do you overcome that with people? How do you, get past that?
Well, so there's one thing that people don't want to talk about life insurance because they don't want to think about their death.
Sure.
And there's one statistic that has held true since the beginning of time. I tell people is you have a 100% probability of dying. You're absolutely going to die, right?
That's
so
true.
it's really a question of whether or not you want to plan for it appropriately with your
Right.
family and what you want to do when you die.
Sure.
So that's one issue. And the other one is, look, some of this stuff is rather boring. So, people don't often like to talk about this, but the unfortunate part is they don't find out about these great benefits that it has, and benefits that people like Walt Disney used to help build Disney World, or
Really?
Ray Kroc to build McDonald's, or Jock Penny to build J.C. Penney's.
Life insurance.
Life insurance, a very valuable tool
Wow.
to help people. Yes.
I never knew that, and that's interesting to me. The fact that I've never heard before this conversation, before I actually started reading your book, I'd never heard of indexed life insurance before,
That's
or
right.
Index Universal Life. See, I
right.
can't even pronounce
Yeah,
it.
exactly.
You know what I mean?
Yeah.
Why is it that I would never have heard it? Is there some reason why people don't
Yeah,
want you to know about
I
it?
think there's a lot of reasons. And by the way, you're not alone. You're not by yourself.
Oh,
I was
good.
just speaking with a lady who's a CPA a couple weeks ago,
Uh-huh.
and I always ask professionals if they've heard about this. And
Sure.
so she had mentioned that she has done 75,000 tax returns over the history of her career.
Wow.
And she didn't understand all of these benefits of Index Universal Life Insurance. And
Sure.
so I think there's several reasons why people haven't heard about it. First of all is just an educational challenge with our school system, frankly, right?
We were
it's
talking
getting
about that
better.
earlier.
It's getting
Yeah.
much better now, especially at some of the university levels. But you take all of these classes in school, and you mentioned, I have a few degrees, and
Yeah.
all the school that I went through, at the time that I went through there, no one ever taught me about mortgages. No one ever taught me about life insurance.
Right.
No one taught me about all these things that we need to know about just to live every day.
Sure.
We took astronomy, took 5 years of French, took
Right.
all of these things.
Right.
So our school systems are not teaching these things in school. And
Right.
so where does somebody learn about these things? Well, there's a couple ways. One is through their financial advisor. Now, there's a herd mentality in our industry where all the financial advisors are taught just to go and work with the affluent.
Right.
And that's why the affluent know about this, and there's great statistics on how many people in that market actually own this type of product. But they ignore the middle class or the upper middle class, and they don't teach them about this. So
Right.
where do people turn? A lot of times they turn to a show on TV or something on the radio,
Yeah.
and they don't understand that those people are on those shows for a reason. It's entertainment.
Yeah.
Just because they're on a show doesn't mean that they're experts in this area. And for those of us that are considered experts in this area, when we listen to these shows, we cringe because
Sure.
some of the things they talk about just really don't make a lot of sense, and they're a lot of times just flat out incorrect.
Right. So if you're someone watching this right now and you're sitting at home, you're saying to yourself, "Man, I went through school, I've got a degree, I didn't learn any of this stuff."
That's right.
Well,
That's most of the country. There's only 4 states.
Yeah.
Or the last time I looked at the statistic that required any type of financial education to graduate from high school.
No kidding.
Only 4, and they're not big states.
Right. Well, and if you think about it too, by the time you graduate from high school and you go to college, you're already starting to get financial responsibilities.
That's
you know,
right, yeah.
and for so many people, they wait so long to start planning anything. And I found that this was a great resource for someone like myself who thinks that I am smart.
Yeah, yeah.
You know,
exactly,
roughly,
yeah.
you know, a little bit. And I was learning a lot from it. And it was the kind of thing that I think some people might be embarrassed to ask about.
Yeah.
You know what I mean? But this is a very accessible way to get it.
Very accessible way, and my hope is also, is I wrote it in such a way, because look, I understand this stuff can be boring, so I wrote it in such a way where it can be a little bit of fun, and, you know, I don't think they're mutually exclusive. You can have fun and learn at the same time.
No,
so.
and that's in the book, and you know, that brings me to my next question for you, the nerd alerts. Where did that come from?
Right, yeah.
Because folks, if you get the book and you read it, you're going to see that there are nerd alerts in the book when things get a little bit technical, but I loved them.
And so I'm a proud nerd, so I'm not picking on nerds.
Right.
All right, and I
We're
teach
not
my
picking on
kids
nerds.
to be nerds also. But what I found, especially as a professor at the university level, is of course people learn in different ways, especially adults.
It's true.
And you have a large segment that just, look, I want the high level stuff, I want the conceptual stuff, I don't want all the details. But then you have the engineer type, sometimes the doctor type, and they want to know every single detail.
Yes.
And so how do you present educational material to people who have those different learning processes? And so what I've done in the book is I've written it so that it's very detailed, but I have nerd alerts that identify where it's going to get sort of a little technical and maybe a little boring to some people. So if you're just a high-level conceptual type of learner, you just read through the book, and when you get that nerd alert, you know you can skip that part.
Right.
You just go on to the next part. So it's really sort of almost 2 books in one if you think about it that way.
Well, and that's interesting because if you're someone who has very little, you know, financial acumen, this is great for you. But if you're someone who is sort of a seasoned investor, you're going to learn from this as well. I mean, so you've actually hit it on a couple of different levels. So here's a question I came across, and I want to ask you this one. All right, I've always heard that I should buy term and invest the difference. Why?
Okay, so that is a very good argument, and was a very good argument in the 1970s.
I'm living in the past.
Okay, and so there's a reason for that. We go over it in the book, the introduction of mutual funds to the public and so forth. But unfortunately, what's happened over the years is people still have that same argument, and they don't understand that things have changed. So a lot of times when I'm doing a training class, you know, I bring out an old phone that's, you know, a rotary dial, and half the audience doesn't even know what it is.
Right.
And I explained to them, look, if we're looking at this phone, this is not the iPhone that we all have, right? Things have evolved over time. And so there's no one great product for anyone, and I use a lot of term, and there's a place for term also. But if you look at it and just compare apples to apples, buying term and investing the difference, although it was a great story, is not a good story anymore in most cases.
Okay. Talk to me about cash value insurance, because I've heard it's expensive, is it?
That's right. So this goes back to the buy term and invest difference. And,
Right.
And a lot of times you'll hear that argument, oh, cash value is expensive. And the challenge with that, there's 2 things. One is sometimes people are just being outright dishonest. They're comparing apples to oranges. And in another case, they just don't really understand the technical parts of it. So if I were to say to you, hey, look, you need to buy this bicycle instead of the motorcycle, because the bicycle is inexpensive. The motorcycle is real expensive, right? You're going to look at me funny because I'm not comparing apples to apples.
Right,
So cash value insurance is actually a complete different animal. You have a savings component and an insurance component. And in fact, actuarially, if you look at the insurance component and compare that to the term cost of a term policy, you'll find in a lot of cases that the cash value is actually cheaper and less expensive on the insurance.
Really?
Absolutely.
That is crazy. I never would have thought that.
Yep.
Okay. Let's talk about other things that I didn't know. Living benefits.
Living benefits.
I knew a few of these, but my gosh, there are so many that you cover.
Absolutely. So living benefits is something that's relatively new in the industry. And if you think about, we talked about why don't people like to talk about life insurance? Well, they don't like to think about dying. And honestly, some people don't necessarily want to buy something that they're not getting benefit from, right?
Yeah.
And so over the past few years, what we've seen is the development of what we call living benefits. And what that means is, with your own life insurance, you can actually benefit while you're still alive from some of the benefits.
Wow.
For example, critical illness, chronic illness, long-term care. Those are all things that you can benefit from while you're still alive. And so think about, I use an example of my father-in-law had quintuple bypass surgery like 30 years ago.
Wow.
If he had the type of insurance that we have today, if he had it back then, he would have been able to actually take money from the death benefit tax-free and use it to help pay for medical bills, help pay for time while he's out of work, or go to a trip to Italy if he wanted to. He could use it for any reason he wanted to. So life, these living benefits are just incredibly important and incredibly popular as well.
See, that's amazing too, because I think that's the kind of information that even if you, in a lot of cases, if you have a financial advisor, you may not know that. You may not hear that, but you find it out in the book.
That's right. And we live in Florida, and
Yes.
There's a joke we say all the old people live in Miami, and then all of their parents live here in Tampa Bay,
Right.
where we're at, right? And so you see a lot of, and I'm at an age, you may be there as well, we're starting to see our parents, with going into nursing homes and having all these challenges, and they don't have any coverage. Well, you can actually get coverage through your life insurance. And by the way, critical and chronic illness, as we talk about in the book, isn't just for older people. You'd be amazed at the statistics on younger people.
Yeah, and that's the amazing thing, is that I think that younger folks, and that's why it's so important that they get the book, they read this, because they don't know.
That's right.
They don't know about these things. So the sooner you learn, the better. Speaking of which, we were talking earlier about how when I got a job, and I went in, they passed some forms across me, and it was for a 401k plan.
That's right, yeah.
And you told me that it was a Trojan horse, and that's actually talked about in the book, but what does that mean?
We have a whole chapter in there about 401ks being a Trojan horse. And
Right.
so today there's almost $6 trillion in 401k plans. And we have about 55 million Americans that are involved in these plans. And we really look at that as sort of the benchmark for the economy and how well people are doing. And that's sort of one of these signs of being an adult is you're in a 401k plan. And what they don't realize is all the challenges with 401ks.
Right.
It used to be that you'd go to work and you got a pension.
Yeah.
And so the 401ks weren't around, so the company would pay you when you retired. And all 401ks they were a way for companies to do two things: reduce their costs, and then more importantly, I would suggest, is to take all of that investment risk and put it on the individual.
Right.
All right? And so what we're finding now in these days is people have these 401ks. They don't know how to manage the money. Statistics show that over and over again.
Yep.
They're really investing all the money. The company's not really matching more, but there's a bigger issue there, and that involves taxation.
Right.
And so taxation, believe it or not, today is at an all-time low, or pretty much an all-time low.
Yeah.
And we have a lot of challenges as a country. We have a $10 trillion debt, and that's just what's on the books. Some people will tell you that we have $100 trillion off the books if you combine it all together. All right? So if we're at a historically low tax rate, what's going to happen in the future? And many experts suggest it's going to go up. So how much could it go up, would one think? Well, what do you think the highest tax rate ever was in the United States?
Above 70%?
Above 70%. You
Really?
still have to go higher.
90%.
Actually, 92%.
My gosh.
All right? So what happens, especially for younger people, when they're putting all of this money away, and they get to retirement,
Right.
and then they find out they don't know what their tax rate is. You don't know what your tax rate is in 10, 20, 30 years, right?
Right.
That can become a little bit of a challenge. So with Index Universal Life Insurance, you don't pay any taxes at all on the growth or the distribution.
Wow.
And so we cover all of that in the book. And there's another thing, and I know we're going to talk about this also, is just the market risk and how you manage that as well.
Yeah. Well, and to that end, we were talking about locked-in market protection.
That's
now,
right.
Now, what is it? Because it sounds amazing.
Exactly.
Yeah.
Right? And so studies show that when you have a professional helping you with a portfolio, you actually, on average, do over 2% better than trying to do it on your own.
Wow.
And most people, like you said, they just fill out the paperwork, and a lot of times they'll see an age, what we call an age-weighted fund, and they'll say, I'm this age, and I put it in there.
Right.
They don't even think about it, right? Well, the challenge is, as we've seen over the past 20 years, is that the stock market can actually go down, right?
Yeah, it's
okay?
happened.
And it's gone down 20, 30, 40%. Now, the biggest thing I've learned in all my years of doing this is mathematically it's more important not to lose money than it is to make money. And we go over the math of that in the book. So with Index Universal Life Insurance, you're able to have market-linked returns. However, if the market goes down, you're guaranteed never to lose money on that savings portion.
So you don't lose the gains that you made in the savings.
You don't lose any of, well, the market goes down, you don't lose any of the gains, right?
Wow,
Now they
okay.
it's technical how they do that. We
Right.
cover
Well,
that
it's
in the
book,
book.
though. It's in the book.
But the idea is that you can go up
Right.
and never have to go down.
I like that.
Now it sounds too good to be true.
It does.
And there's a little catch to it.
Okay.
But the catch is worthwhile, and that's what we cover in the book.
Ah, okay. All right, yet another reason. Okay, I gotcha. So I was amazed to find that with the insurance you can get income and benefits both. How can I get income?
Well, so you get income from the product and you get the benefits. The real important thing that I think you're referring to is that
No taxes.
There's no taxes.
Yeah, how does that
right?
work?
And so, well, life insurance is the proceeds of it are tax-free.
Mm-hmm.
And also the internal cash that builds up in the savings account that you have in there are not taxed.
Wow.
And then there's a way to take money out of the policies
Yeah.
where you don't pay any tax at all. And your family never pays any tax. And so this is one of the reasons I go back to the colleague that I was talking about who works with the rich and famous.
Right.
And he says, I make rich people richer. And that's, rich people know not to pay taxes.
That's right. That's right.
And it's a legal way to do it. It's something that's out there that anybody can do,
Yeah.
but people don't know about it.
Yeah, and again, it goes back to the whole, it's not about making money, it's about not losing money.
That's right.
Taxes.
Yeah, that's a good point.
So,
very good way of putting it.
Thank you.
Yeah.
Now, you blew my mind with something else too. And folks, I'm going to tell you right now, it's amazing how many things are in this book where you're going to sit there and go, wow, I had no idea. Zero interest, I want to make sure I say it right, zero interest loans?
Yeah, so, and we got to say effective,
Okay.
So technically what happens is life insurance companies are required by law to give you a loan.
Right.
Now it's based on your own money, okay?
Right.
But what happens is they'll charge you a percentage on the loan, and hypothetically we'll say 3%. But then they're also giving you that same percentage back on the money that you have in the account. And so if it's 3%, and they're charging 3%, really
Right.
effectively it becomes a 0% loan. And this is going to be another bombshell.
Okay.
Believe it or not, there are times where you can have negative interest rate loans.
Stop it.
Absolutely. So think about that, right?
Okay.
You can have a loan and actually have a negative interest rate.
So
effectively
I'm
is the way that it
making
comes
money
out.
in a sense.
There's a possibility.
A
and you have to-
possibility.
yeah,
No
yeah.
guarantees here.
No guarantees.
No guarantees.
Right?
Wow.
But absolutely.
I'm guessing it's in the book.
It is in the book.
Okay,
yeah.
it's in the book. All right, let me ask you another question. What if I already have a cash value policy
So
in place?
there's a lot of cash value policies out there, and
Yeah.
they're still out there from not necessarily from the 70s, but the same type of
Yeah.
of product, right? Where they have fixed interest, they don't have the living
Sure.
benefits, they don't have all the bells and whistles that the new products have, and so you can very easily take that product and just transfer it tax-free into a new product,
Right.
providing that you qualify for it. It's something you can do. It's something that you really need to make sure you sit down with a professional.
Right.
You analyze whether it makes sense for your personal situation, and you know all of the expenses and everything involved. But you can just simply take that and switch it over to one of these newer policies.
Right. But you know, the interesting thing about the book for me was that I've spoken to professionals before, and the information hasn't been presented as clearly to me, or just in a way that I personally understood as it was in the book. You know, I may not be on the nerd level,
Yeah.
but it's just very interesting the way the info comes across in here. And to that end, you all have a challenge
I do have
that's
a
in the book.
challenge.
Do you mind if I read it?
No, well, yeah, that's fine. I think we always put that in the end of the book. It's sort of that cliffhanger. But I think for purposes of our conversation,
Yeah,
we can
you're
let
okay with it.
people
Okay,
in on
sorry.
it,
So
right?
here we go. I'm going to read this
All
to you
right.
folks. Now listen to this, and this is at the end of the book. I would like you to show me a financial instrument that provided a hedge against inflation. 100% guarantees that I will not lose my money. And by the way, you want to walk into a bank and ask them for this. 100% guarantees that I will not lose my money due to market risk. It has tax-free growth and distributions, the ability to take an interest-free loan, avoids probate, that blew my mind, provides creditor protection, guarantees my family that my income will be replaced should I die, helps me protect myself against chronic, critical, and terminal illness, and of course allows me to take money out anytime for any reason at any age without penalty. Oh, and by the way, I only have $200 to invest. Go to a bank and read that statement to them and see what do you think they're going to say?
Well, I'd actually like to see the video of
The reaction.
So, I mean, if you can video yourself when you go in there, because I can tell you, that, I mean, it'll just blow their mind. And,
Yeah.
and honestly, I've actually done this in banks, as you can imagine.
Sure.
And they have no clue.
No.
They have no clue.
They're not prepared
And it's
for it.
not only banks, it's you know, broker dealers, it's traditional financial
Sure.
places. It's you know, your CPAs. People don't understand this product and the power of it. And if you just read that one sentence right there
Yeah.
that you read, you see how powerful this can be. And by the way, we just used $200 for an example.
Yeah.
Right? So in some cases, this could be $50. It could
Right,
be,
right.
you know, $5,000. It all depends on the individual and what their needs are.
Yeah, whatever personally
That's right.
they can do.
Yeah.
Jim, this is a great book. Where can people get it?
Well, so let me suggest one thing first.
Go ahead.
One is that when we go over this, a lot of times everyone thinks, well, everybody should have this, right? Why wouldn't anyone have this? And it is an amazing, amazing tool. However, there's not one particular product that's best for everybody.
Sure.
And that's one of the things you can see when you see these guys on TV and the radio when they're all saying, oh, you do this, you do this. Well, they don't know you. They don't know your circumstances,
Right.
all right? So you have to qualify for this product, all right? You need to understand what this is. So this may or may not be the best thing for you, and the purpose of me writing the book is so that we're educating people so they understand what their option is, and they can make a determination whether
Sure.
it's the appropriate thing for them or not.
Right.
Now, in terms of where you get the book, here's the amazing thing, is once I've released the book and I've gone out and I train other advisors throughout the country, I'm finding that a lot of high-quality professional advisors are actually purchasing these books by the boxes.
Right.
I've had one individual buy several thousand of these,
Yes.
right? And they're actually giving these to their clients to help educate their clients on financial issues and
That's
financial
smart.
tools.
Yeah.
And so I would tell you, if you work with a professional, to ask them if they've heard of this or if they have a copy, because a lot of times you get a free copy that way,
Right,
right?
right.
But if you do want to get this and just read it on your own, or you know, if you do these things without a financial professional, the best place to go is our website, which is thefinancialpocketknife.com.
Yep.
And of course, we're on the Amazon platform as well.
Okay.
We don't do bricks and mortars because honestly, it's the market for that just doesn't work
Yeah.
economically
Sure.
these days. But I'd really tell people probably the best place is to go to our website.
Okay,
Yeah.
great. Jim, it's been a really educational time we spent
Yeah,
here today.
thank you for the time.
Thank
I
you so
appreciate it.
much.
Yeah,
Appreciate you coming by.
absolutely.
Folks, make sure you get out there, get your copy, talk to your financial advisors, ask them for them, see if you can get it for free. Otherwise, as Jim said, go buy a copy of your own. All right? Take care. Till next time.